Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, US non-farm payrolls. The latest US employment data this week will be closely watched on the back of the explosive upward movement we saw in January jobs data. That data was the first big shift in the market's outlook for the Fed, signaling that the US economy was in much better health than many thought. Ahead of the March FOMC, further strength in US labor data will likely see market pricing switching in favor of a larger 5% hike from the Fed. Number 2, March RBA Meeting. The March RBA meeting on Tuesday is drawing a great deal of attention on the back of recent developments within the Australian economy. An unexpected uptick in January inflation fueled a surge in hawkish RBA expected for the upcoming meeting. Australian dollar has been lower consequently as a result of downgraded Aussie growth forecasts in line with elevated inflation and higher rates to come. However, with inflation seen falling back a full 1% in Feb, market pricing has moved back in favour of a smaller 0.25% hike this month. Australian diffraction will therefore depend highly on how hawkish the RBA is in its guidance. Number 3, March BOC Meeting. The BOC meeting this week should see the bank reaffirming its message of keeping rates on hold for the time being, while it assesses the impact of recent tightening. The latest Canadian reading was seen bucking the trend we've seen elsewhere and moved lower in January, suggesting little reason to expect any hawkish shift from the BOC. In line with this, Canadian dollar is likely to stay lower into and through the meeting. Number 4, March BOJ Meeting. This week's BOJ meeting marks the last meeting with Croda at the helm. Incoming BOJ Governor Ueda has given no indications that the bank is looking to imminently change the course of the BOJ monetary policy, and so, barring any surprise action from Croda, the meeting is unlikely to shake the dovish BOJ view. With hawkish central bank expectations building elsewhere with the Fed and ECB, this should keep Japanese yen pressured into and through the meeting. Number 5, UK GDP. The latest look at the health of the UK economy will be closely watched this week, with GDP having fallen minus 0.5% in December, taking quarterly GDP down to 0%. Traders will be looking to see if there was any rebound in January. Unless we see a positive reading, traders are likely to take a further monthly contraction as a sign that Q1 reading is heading lower from December quarter, which should see Great British Pound reversing lower near term. As always, you can click on the link in the description just below to see the full economic calendar with the previous month's data and consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and make sure to give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.